Hello and welcome to Lucid Totality. I'm Leah Wald and I'm here with Tyler Jenks. And on today's vlog, we're going to talk about observations about the recent SEC statements, gold, as well as what we're currently seeing in the markets today in Bitcoin. In the next vlog, I'm still getting used to that word, tomorrow we're going to do a bit more of a deep dive of why we truly think that right now in history is so absolutely spectacular, wonderful, incredible, and why we're using all these superlatives. So, Tyler?
Hello, and welcome to our third vlog, the third of probably about 100 that will come out over the next 3 months or so as we look very carefully into the world of cryptocurrency and Bitcoin specifically, and tie that all together with what's going on with other asset classes and other markets. This is the 24th of January. Truly a fantastic day, fantastic decade. Our opinion, one of the most fantastic centuries, going all the way back to the beginning of human civilization. I know that's a broad, sweeping statement. It seems overly optimistic, almost Pollyannish, but we will explain tomorrow in our vlog why we feel that way by using many, many examples of what has been occurring over the last 60 years, and particularly over the last 20 years and 10 years. So with that, Leah, why don't we get into the Securities and Exchange Commission?
All right. Okay. To date, no ICO has been registered by the SEC, nor has any ETF. And for the most part, at least what I'm noticing, is that the SEC is not only making it difficult for new securities to come out, but they're also beginning to question the attorneys that are bringing them out regarding if they are being truly responsible as to the due diligence. Can you shed light on what you are currently seeing and why you think the SEC has right to start questioning these attorneys?
Yeah, that's a great question and a great observation, and I'd like to put it in a little bit of context as we get into it. The context is simply that when Bitcoin first came out 10 years ago, it did not need regulation, and it was very clear that it could not be regulated. The second part of my statement there is controversial, I know, particularly by regulators all over the world. But I firmly believe that Bitcoin is that revolutionary. I'm not talking about all cryptocurrencies. I'm talking about Bitcoin and the Bitcoin blockchain that has taken us to where we are today.
Absolutely. So what recently came out today that Tyler and I was talking about was that the head of the SEC made a public statement that they are, quote unquote, looking closely at the trend of public companies that have announced new focus on the blockchain. My favorite is on the iced tea company. Tyler, what do you think that they're thinking in this regard, and potentially what we should consider from the SEC chairman as important in understanding this issue?
Yes, the SEC chairman, Jay Clayton, maybe it was 2 days ago, but I believe it was yesterday morning, came out with a fairly brief, but in my opinion, very, very powerful, very telling, and interesting set of comments. The one that you just referred to was the first of two that we'll talk about today, which has to do with public companies. His wording was the trend of public companies that have advanced or announce new focuses on blockchain. And as you rightly quoted, he said that the SEC is looking closely at the trend of public companies that have announced new focuses on blockchain. Now, what in the world could he mean by that? Let's just break it down a little bit and notice that he's talking about public companies. So what does that mean? To most of us, financial world for a long time, so I know immediately what it means. It's a bit of a code word. Many companies in the United States are private, privately held. They do not interact with the public in terms of issuing ownership or issuing stock or attempting to borrow money from the public by issuing bonds. So to begin with, we're not talking about companies and corporations in general. We're talking about those companies that in the past have made the decision to interact with the public, not just selling them goods and services or hiring them to work at those companies, but to actually take a financial interest and allow the public to take a financial interest in the corporation. That is what Jay Clayton is talking about. He says they are looking closely at those companies and the trend of public companies in general that have announced focusing or focuses on blockchain.
So back to ICOs. They are now also being targeted for scrutiny regarding specifically the professional obligations of the U.S. Securities Bar in understanding the rollout of an initial coin offering. What differences are you seeing, and can you explain the differences between ICO, IPO, and in relation to what we've been talking about?
Exactly. Going back to that first statement about talking to public companies, there are those companies that are private that are they must go through the SEC if they're going to become public. And that is what's called an initial public offering, IPO. So we've got, on the one hand, those companies that are already public. On the other hand, we've got two groups. One that is made up of privately held corporations. And then the third is those privately held companies that decide they want to go to the public to either issue stock, which is ownership in the company, or to issue bonds, which is borrowing money from the public and other institutions. So you brought up a point in terms of why the Securities and Exchange Commission is now talking about ICOs, which are initial coin offerings, with corporations having nothing to do with the public and issuing stock to the public. This is a loophole, and no one could foresee that it was coming until Bitcoin established the thing that is called a Bitcoin token, and then proceeded to create the blockchain methodology, which we will not go into today, but we will in great detail in future vlogs. So now you've got something in the form of the first cryptocurrency, which I said did not need to be regulated, and something that happened along the way incidentally to Bitcoin and blockchain, and that is the the beginning of cryptocurrencies. And all cryptocurrencies over the last 10 years, particularly 5 years, 3 years, and last year, in some fashion are offshoots of that blockchain. When a company or a promoter or an investor makes the decision they're going to use the established blockchain to fork or to split away from the Bitcoin and the original blockchain and form a new cryptocurrency, what really happens is that they're using all of that 10-year record on the blockchain, and then they make little changes to it. In some cases, they make very large changes to it. And sometimes they rewrite major portions of it entirely. What does that do? Well, basically what it does is now you've got a new coin or a token that the promoters, the investors, and the attorneys and the CPAs that do audits and the marketing people come up with a way to sell that new concept to the public. And that's where Jay Clayton makes the distinction. What just happened in that brief description I gave is we went from a non-regulatory formation into, by accident or by chance, a new form of approaching the public, which is the term that Jay Clayton was using when he started talking about the relationship between IPOs, initial public offerings of stock or ownership in a privately held company. They must go through a rigorous initial testing by the SEC, and then from that point on, they fall under the regulation of the SEC through all kinds of laws and all kinds of regulations and all kinds of restrictions and all kinds of government oversight through this regulatory body and others in the business that they start performing. That's the initial public offering, the IPO. Now all of a sudden there's this funny little thing called an ICO, which is dealing with a coin or a token or a digital expression of value. And the SEC has never looked at anything like this before. And it probably wouldn't be such a concern on the part of the SEC if it weren't for the fact that these things are multiplying like rabbits. All of a sudden, instead of one Bitcoin, one cryptocurrency, there are over 1,200 of them. And you mentioned to me, Leah, something that you saw go in terms of what was expected in 2018. Do you recall what they were talking about in terms of how many new forks and how many new tokens might be coming out?
Hundreds.
Isn't that amazing? I mean, it's unbelievable. It's happening so fast. And I'm going to read a brief statement that Jay Clayton made about this phenomenon and the players in it, because I think it gives us some clues about what we could very well see in the near future. Here's what he said, and he's talking about the attorneys and the lawyers and the legal advisory groups that are helping these initial coin offerings come to the public. He says, first and most disturbing to me, Jay Clayton, to me, there are ICOs, initial coin offerings, where the lawyers involved appear to be, on the one hand, assisting promoters in structuring offerings of products that have many, which I think is a very important word, not one or not a couple, that have many of the key features of a security offering, but call it an ICO, which sounds pretty close to an IPO. So what Jay Clayton, the chairman of the Security and Exchange Commission, just said a day ago or 2 days ago is that we've got a very gray area in which the black and the white that is forming that gray are becoming brighter and brighter, and the gray area is beginning to fade in the opinion of the Security and Exchange Commission.
Yeah. All right, let's move on to gold. So we're absolutely seeing all-time highs for the S&P, the Dow, the NASDAQ, and now with gold. And I guess my first question is, we're also seeing it as the dollar weakens. How do you see the correlation between the two?
There has been a pickup in interest in gold recently. This morning, it hit a high on this move. And let me just quickly explain what I'm talking about in terms of the move, in terms of gold prices. I'm not going to pull up a chart. We will spend an entire vlog on gold, and we'll get into a lot of detail on it. But the movement of gold prices over the last, I'm going to take it back to all the way back to the 1930s very briefly. But gold for a long time was locked in at a price of $32 an ounce. In the middle of the Depression, it got pushed up a notch to $35 an ounce. It held that value of $35 an ounce all the way until 1971 for a number of reasons having to do with countries around the world agreeing back in 1944 to a type of reserve currency for all currencies. And that reserve currency was made up of two things. One was the US dollar, and the other was gold, and gold was pegged at $35. That kept going all the way till 1971. Richard Nixon, as the president, made some changes, and he no longer honored the fact that gold could be automatically converted into dollars and dollars converted into gold at a set price. What followed during the next 10 years happened to be what we have been talking about on these vlogs, and you and I, Lisa, have talked, or Leah, have talked about a great deal, which is gold went into a hyperwave. After Richard Nixon did what he did, and gold ran from $35 up to $880 between 1971 and 1979, 1980. So now all of a sudden you've got gold being determined by the marketplace. And after it ran up to $880, it spent about 20 years dropping all the way down to $265. And then we started just about 15 years ago a march back up. And that march back up took gold prices from the lows of $265 all the way up to 5 years ago, where it hit $1,990, $1,940 on certain exchanges. Let's just call it somewhere between $1,900 and $2,000. That was about 5 years ago, and it's been dropping from that high all the way down to $1,100 just about a year and a half ago. Began climbing again. And when you hear people talking or on the financial news or you read that gold is moving higher and is hitting new highs, what they're talking about is not new highs relative to $1,900, the all-time high. It's saying that we have moved up from $1,100 to $1,200, $1,250, $1,300, and then we got up to $1,340 just about 2 months ago. It fell back again from $1,340 all the way back down to about $1,250, not a huge drop, about $90 an ounce. And since then, it has been marching forward, and just this morning, it broke through those highs of $1,350 and ran briefly over $1,360. So there are a number of people that are saying that gold is on its way back up to all-time highs of $1,900. There are a lot of people saying that is never going to happen, and gold is going to begin going back down again for some of the reasons you mentioned in your statement, and we can get into that in detail. Where are we right now with gold, in my opinion, and what are the things that are should be considered by people looking at gold?
Interesting. I'll go back. Here we go. A lot of investors obviously have been talking about cryptocurrencies a lot. Until very recently have they started talking a bit about gold. However, at least what I've been noticing is that for the most part, the people who are talking about gold now and making the observations that you have are the people that have been talking about gold for quite a while. But to bring it back to cryptos, we're seeing an uptick in gold and an uptick in Bitcoin this morning. So what do you think?
Yeah, that's a great question, and it's got a lot of layers. Just making some quick observations about cryptocurrencies relative to gold. 10 years ago, when Bitcoin started, it was starting at the end of the worst downturn in world economy since the Great Depression of the 1930s. That is not an overstatement. If you read any of the books about how close the world financial system came in late 2007, throughout 2008 until March of 2009, how close the world financial system came to completely melting down, you will know what was the impetus of Satoshi Nakamoto of writing the white paper that started this whole cryptocurrency craze. It is in response to that Bitcoin and now other cryptocurrencies have become the greatest appreciating asset class in financial history in terms of the amplitude of the move and the short time it's taking for those moves to take place. So the question is, what's the relationship between gold and the cryptocurrencies? It is not direct, but it is deep, and it's very powerful. And it goes back to 1971 when Nixon closed the gold window. What happened starting at that point was that governments were free to print money without any real backing, without any reserve currency other than the US dollar. So that's starting point number one in trying to understand not only the gold market today, but the cryptocurrency market. The governments did not do a good job with that. The United States, in particular, did not do a good job being the reserve currency of the world in terms of being an intelligent steward of the amount of fiat currency that it allowed through its legislative and executive branches to produce. It's true that it comes to the Treasury. It's true that the Federal Reserve, to a certain extent, has some controls. But in general, without getting into a lot of detail, if you go from 1971 through today, you basically go from a no debt, no deficit type of an economy to one with $20+ trillion of debt. And what debt means in this particular instance is the government owing, the government being the borrower of value from others, from either individuals or institutions or other countries, other central banks. So when you hear about China having a huge surplus with the United States, what it simply means is that the U.S. is having to print fiat dollars to make up for that deficit between the two countries. Okay, so then we have Satoshi Nakamoto. Then we have Bitcoin. Then we have some kind of a loophole in regulation that allows us to go from one possible answer to the fiat coin, the fiat currency question, to 1,200 cryptocurrencies, all attempting in some way to ride on the coattails of Satoshi's original vision of what do we need to replace the financial system with, since it is not working. Okay. That's why gold is tied very closely to what is going on with cryptocurrencies. You won't see it day to day, week to week, month to month, or year to year in terms of one price will go up and the other won't. It's not tied in that way. There are two very powerful potential reserve currencies now. There used to be two, the dollar and gold. Now, proponents of cryptocurrencies believe there are two, gold, because it has been a reserve currency for thousands of years, certainly for 2,000 years, certainly for many, many centuries, and has taken many, many forms. Therefore, it's in the social and the financial psyche. And people know gold all around the world. Very few people know about cryptocurrencies. So those are the two things that are out there right now that have the potential to change the financial system. Now, 99 out of 100 people, 999 out of 1,000 public people, meaning government people, meaning central banks, believe that Bitcoin or cryptocurrencies will ever play that role. On the other side, 999 of 1,000 people in the cryptocurrency world believe that it will. One of those two groups is going to be correct. The other is not going to be correct. But in the middle of all of that is gold. Why? Because there is the potential to take the world financial system back to a gold standard. And that 999 out of 1,000 public figures know that. That doesn't mean they're going to do it, or that a central bank is going to do it. There are rumors flying that maybe under a Trump administration, with a change in the Federal Reserve and a change in the legislative power, that to fix this problem of too much fiat money, too many debts against the U.S. Treasury and the taxpayers that cannot be paid at even low interest rates, let alone if interest rates go up. There are people beginning to talk about going back to a gold standard. And that would be at least one vlog or podcast, and maybe several. We will get into that because it's a very interesting concept. And there are members of both the Federal Reserve and a number of other central banks who have floated the concept.
So the way that you described the historicity, it sounds a bit similar to the hyperwave theory that you've talked about before. Are we potentially in one now with gold? If so, do you think that we are trending upwards or downwards, given that the different phases of the hyperwave go up and down?
Yeah, great question. And as we've been telling listeners, starting in a couple of more vlogs, we are going to start introducing individual hyperwaves. We'll do one each presentation for about 20 presentations. So we'll look at 20 different hyperwaves. It sounds like a teaser, and it is, because it's a very complicated subject, and we want to be very thorough with it. So we want to present it stage by stage, so that everyone can recognize the difference between a bubble and a parabolic move and this thing that I call a hyperwave. Your question is gold in a hyperwave? Not yet. It is not yet in one. It had one back in the 1970s that went from $35 to $880. I'm beginning to get signs that one is building. And we will report on that as it happens, if it happens. What we do know for sure is that Bitcoin is in a hyperwave. And because of that, every one of these podcasts, every one of these vlogs, we are going to go back to Bitcoin. And so why don't we do that right now?
Sounds good. One last question on gold, if I can.
Of course. Yeah.
So given that the dollar is going down and potentially will take a bigger dip, which I think may mean that gold will continue to go higher. So given just wrapping up everything, what you're saying about the hyperwave, but looking at stages in at least the short term, how do you see the price of gold?
Great question. There is a fairly close correlation, inverse, between gold and the dollar. But it is not set in stone in any way. They both can go up, they both can go down. What is clear is the dollar is going down rapidly. Today we broke 90 on the DXY, a dollar composite made up of a number of different currencies. And it's been a while since we've been below that 90. We had been up over 120 not too long ago. That's a very big drop in the dollar. A number of analysts see 85 as the next stop, which is another very big drop. Gold is moving up, but it is not moving up at the rate at which the dollar is falling. However, because we have just hit another high on this move in gold from $1,100 up to over $1,360, The momentum is beginning to build, and we've broken out of a lot of resistance areas recently. I think gold prices are going higher. Clients that I work with, we have very substantial gold holdings now. We didn't during much of the drop of gold from 1900 all the way down to 1100, but just in the past couple of weeks, we're taking bigger and bigger positions in gold. Where is it going? I think we're going to see 1400 fairly quickly, and it's very possible that depending on many, many other factors, that we could see gold go 1500, 1600 over the next couple of quarters, and certainly by the end of 2018.
I'm excited about this full gold vlog in the future. All right, Tyler, to the price charts. So it looked as if Bitcoin was trying to rally today, but then it dropped back down. So still bearish. Can you pull up your charts and tell us what you're seeing?
I will do that right now. And I will make this a little bit larger. And what you are now looking at is the same chart we keep looking at, which is Bitcoin on the Bitstamp exchange. And the last price was 11,206 right here. This is a 30-minute chart. So just about 6 hours ago, we were up at 11,500. And then you see that once again it failed. We talked yesterday about the fact that ever since December the 16th, when Bitcoin hit 19,666 as seen on this 12-hour chart, that the direction has been down, punctuated by these moves up, attempting to reestablish an uptrend, and then failing. And then once again, attempting to reestablish an uptrend and failing, going sideways and failing, going up, trying to break through resistance and failing. And then, as you said, Leah, earlier today, it tried one last time, and in this 3 12-hour bars, it got back up to 11,500. Now we'll go back to the 30-minute chart to see exactly where we are, and you see that the price has gone above both of the longer term and the shorter term 30-minute averages, which doesn't really mean too much. When you look at the 1-hour chart, you see that we are slightly above both, but that 1-hour bar, the candle on the far right, has turned red, meaning that it is lower. We have dropped from 11,500 to that level. We look at the 2-hour chart, we are above both of the moving averages, but also the 2-hour candle has turned red or down. Once you get to the 4-hour chart, we have not broken through the longer term moving average. We're in between the two. The 6-hour chart, we are closer to the lower moving average, and so on. When you get out to a daily chart, we're below both moving averages and have struggled right here 4 days ago to even break through and hold the lower moving average. This is very, very simple technical analysis, and we could and we will use a lot of tools when this downtrend is ending, which it will. But for now, the easy way to look at this is we have been in a downtrend since December the 16th. We are still in a downtrend. There is no hurry to jump into this market. It is probably going lower. And as we mentioned before, My target right now is somewhere between 7,500 and 8,000 as the initial target, and very possibly the last target before we can turn higher again.
Great. Well, everybody, this is the end of today's vlog. Thank you so much for watching. Again, if you have any questions, please put it on the bottom. If you like what you're seeing, give us a like, and see you next time.